Talking about the website here, Scott sent out a link a long time ago. You guys have probably seen this, but I'm going to review it again. Damn it. Okay. You guys, have NVIDIA not been to iGroup Tools?
I have not.
You guys have not been there? This is going to be a good place to, you can just take a quick quote. If you've got time, obviously this is internet based, so if you're in the house, you're probably not going to be able to access this. But over here you can do the, let's go to the software side first. What he was talking about before with the software, okay, there we go. This is going to be a place to download all these type companies for all their software. You got Lincoln, Genworth, Aviva. We don't offer Banner Life, but basically the ones you guys are going to run across just looking through here. You got North American, Transamerica, West Coast Life. There's going to be a ton of them. This UL training, I'm only going to go over about 3 or 4 companies. I took kind of a survey from all the different agents that are writing these ULs, and kind of, I'm going to focus it down to just a few different companies. But just click on these here. You can actually download the software. It's actually really simple. This one you actually have to have a website to go online. What is it? iGroup Web Tools.
Welcome, of course.
Just go to iGroup Web. Usually when I double click it, it'll highlight the whole thing. Is that what it is, Michael?
iGroupTools.com.
You didn't say web? Okay, so this is the part that's actually really cool, the quote side. If you guys, let's say you're doing a go back, you did a good fact finder, you did Core 4, you did your fact finder, you're going back for any kind of presentation now. This is a really quick and easy way. Instead of running 5 different computer screens in one house like Scott's done, he was telling me earlier, you can actually put all their information into just this one and it shops it for you. Not all companies do under 100,000, like Lincoln.
To get there?
Well, what?
What did you click on to get to that?
Quotes are the upper left-hand corner.
Yeah, but that brings up one box, and then
That same box is on your computer that's up there.
I know, but then he just brought up a whole bunch of things.
He
Okay.
just went to stay.
All right, follow me. Marty,
Yeah,
look at me.
I'm looking at you.
I can't see you, Marty.
All
All right, you ready? All you do is you go to quotes.
Quotes, yeah.
Boom.
Yeah, from there. That's what I'm asking.
Okay.
State, which is
South Carolina, okay?
Okay.
For easy math, we're going to do my birthday, and we're going to do a 65-year-old. Okay? Female, non-tobacco. I'm just going to show Preferred Plus because there's different companies out there that will give you preferred and different rates. We're going to do a guaranteed UL to 100 because that's what a lot of us are writing here. And premium is going to be monthly. If you hit calculator, you're going to hit this a bunch of times and realize that it just shows you how to calculate life insurance based off of what their needs are. You want to hit compare now. Boom. Shows you all the different companies out there, okay? Lincoln, for some reason, does not show up in here. I don't know why, but I actually found out, if you guys don't know, I love Lincoln. I write all my business through them. The same exact policy for this lady at 65 years old is $145.50 with Lincoln, okay? So my bread and butter just got $20 a month cheaper, which is awesome. So this is a great site for that. You can back it down to 25,000, 50,000. Anybody brand new, you don't have to know about solving to endow or anything. This does it all for you, okay? Any questions about this? There's only like 4 or 5 clicks to actually get a quote.
Can you do terms too?
Yes. This here, you pick anything you want. These are all the different quoting software options you have. You can do a 40-year term. You can do guaranteed at different levels here. You can do return of premium. You can do all sorts of different things. Any questions about this at all? It's pretty simple, guys, but I wanted to show you how we actually get this.
Matt, how much are we looking for that?
I'm going to write them down afterwards because that's how I actually compared all these different ones here. So, but I wanted to actually show you the sites. I didn't have any issues with it.
So your preferred route would be right at the January, one buck cheaper. Or is it cheapest one?
Yes. January's the way to go with that.
Without planning yourself.
All right, we got a big, different mix of people in here. Obviously, we got people just out of training and people who have been here for 3 or 4 years. I'm gonna go over the basics. Longer. Some of us have experience and some of us have knowledge of 3 or 4 years. All right, types of life insurance. We're gonna go back to the basics. Yes, Marty, you seem pretty excited.
Jesus, man, I didn't do anything.
I can hear you hemming and hawing. I'm all the way up here.
Yeah, the easy
Two
issue.
different forms of life insurance, right?
Yes.
There's permanent, which is what? What's permanent?
Forever.
Whole
Okay,
life-
there's 3 different types of permanent. What are they?
Whole life UL and easy issue.
No. Whole life,
Universal. line.
universal. What's the last one? Variable. Variable's kind of coupled with universal there. It's different ones. What are the differences between those 3? Just a quick recap. They all make cash value, right?
Yeah,
Whole life is a fixed interest rate, kind of like a CD, it's just plain Jane.
yeah.
Universal life is what?
Sort of a combo of UL and term.
A universal life, their cash value, the only thing that's different is it grows with an index. It can be a fixed account, it can be any kind of S&P, different product. And variable, the cash value grows how?
According to the market.
Exactly. Sub-accounts, mutual funds, different things inside of there. What's the other one? We've got temporary insurance, right? This is the term. I want to make sure you guys understand the difference here. Because what we're talking about is universal life. It's not whole life. If you're replacing a whole life, you don't want to say it's the same thing because it's not. Okay? I don't want you guys to go up there and be like, oh yeah, it's the same as that kind of program and it's something totally different. And it has the same benefits. What are the benefits of a whole life? What do people like about it? If you ever hear me sell against whole life, you'll hear me say the same spiel.
It's got a guaranteed interest rate,
What does that do for the client?
and they know exactly what they're gonna be paying the rest of
Okay?
their life.
Guaranteed premium, right? What's the other thing that's awesome about a whole life policy? Why do people have it?
Usually lasts forever.
Exactly. My death benefit, my premium will never change. I know, it might be more expensive than the rest of them, but that's why I have it. I never want to worry about it again, right? But why do people have term policies?
Their needs may change in the future, they won't need as much.
Okay? Yes. And it's cheaper. It's the cheapest form of life insurance out there other than an accident policy. Reason why people get it, I got a couple little girls. I get a 30-year term for $500,000. In 30 years, the kids are grown up. I don't need that much coverage anymore, and I can let that lapse, okay? The difference between a universal life is it blends the two together. It takes the cost effectiveness like a term policy, so it's a lot cheaper than whole life, but it gives you those benefits of permanent protection. My death benefit and premium will never change. Okay? So that's why you want to spin it to these folks, because if they're talking whole life, they're going to ask you, well, why is this so much cheaper than the other one? Okay? So if you sit down, you're sitting in a turning 65 house, and we've got that same female. She's 65 years old. And you just want any kind of life insurance. What's the cheapest whole life that we have?
UL guaranteed to.
No, I mean whole life.
Lafayette.
Lafayette, right? That's the absolute best, maybe hard to get, but that's the absolute cheapest policy we're going to get. And she said she basically just wants a little bit of barrel. She doesn't want to go spending a ton of money. Lafayette, you guys all seen your triplicate of choice? 25K, 20K, and 15. 25,000 is $91 a month. Okay, 20 is 73. I'm just going to leave this sentence off to make it easier. 15 is 55. Pretty standard across the board. You're sitting with these people. What if somebody already wrote this and you're coming in a year afterwards? What are you going to do? They just bought this policy last year. You come at them, and let's say it's not Lafayette, let's say it's a different company, but the price structure is the same. Oh, you got a pretty good one, there's nothing we can do, right?
Doesn't put that much cash value.
Exactly.
At the time,
So if it had been 6 or 7 years, maybe you can use the cash value, whatever else, but they just took this out in the last couple of years, so that's not there. One of the first company I'm going to show you, I'm going to pass this out. Here, just take one and pass it along. This is what Norman mentioned this to me. This is a great one. This is Americo. It's very simple. There's no paramed, no blood urine, nothing like that if it's under 70 years old. Okay? It's not going to be the cheapest one I show you today, but it's an easier issue type program to get. So if you've got somebody with questionable health, the Americo Guarantee UL is the way to go.
Under 70, you said?
Under 70, there's no paramed.
Yeah, that's not very true though. I know it now, it's a big word, pyramid now.
If they have, originally, or did they have something wrong that now they need a paramed?
At 34 years old, they just pulled up an IV and said, "Want a pyramid?"
Well, that's different. There's typically not a paramed. I mean, obviously, if something comes up in different results, they're going to want. Take a look at it. Does everyone have one?
I'll just share it. I got what I want.
Norman, we got a gazillion.
Go ahead. Okay, so Lafayette's our whole life, right? Lafayette's our whole life company. This is the cheapest one to go with. This is what Norman's been writing a lot of, and I kind of like it. The same $25,000 coverage with a company like Americo is going to be $74 a month. $74.62.
Saying
Oh.
how much?
Sorry.
For which one was that, 25?
So this is with Americo. The same $25,000 policy is $74 a month. So if you're going against somebody in the house or if any kind of competitive situation, the guaranteed UL is exactly what they're looking for because they don't want to borrow against this. It does have cash value growth if you need it, but that's the last place you want to pull this from, Mrs. Jones, because it's going to tack on loans and everything else. It's like a glorified credit card. Okay? So this is one option. If this is the absolute best whole life, but look, you can get a $25,000 for $74 and still not deal with a ton of underwriting. Okay? Or you give them the other option, and I always show this to them because now it's an either or close and it's not a yes or a no close. You guys know what I mean by that? You give them two options, which one do you want? They're picking either one of those. You're not asking them if they want to do it or not. Okay? Would you rather get the cheaper policy? Actually, let's say they apply for $25,000. Okay? Would you rather save the $17 a month? Or would you rather get an extra $5,000 in life insurance? This is $87 a month.
Yeah. You want peas or carrots?
Okay? Very straightforward, very simple, guys. And this is all based off the software. You guys all have Americo software? Before today I didn't, so don't worry if you don't. I just never wrote it. I wrote a lot of Lincoln. ING guys, if you haven't heard me complain about it, I mean, they got awesome software, great marketing, everything. They're just very difficult to deal with, so I kind of pulled some of the stuff back from that. Don't let that be a detriment to you guys or whatever. If you guys want to go with it, then go ahead, but I run across some issues though. So that's Americo. That's just the bottom line. Guarantee UL, very simple to do, just as easy to underwrite pretty much as a Lafayette, if not easier, because some of those are tough. Okay? Let's say they're actually in good health. Better health than that. Say, hey, listen, I'm actually in really good health. I'll do 10 push-ups for you right now. Give me the better rate. I can pass, right? This is Genworth. Genworth's awesome. Has anybody not heard of Genworth? Nobody's going to raise their hand because they're going to be embarrassed. Probably not the right way to ask it. Yeah, I figured that from you. Okay? Genworth's a great company. It's got a good brand name. They're really known for their long-term care. A lot of the savvier clients have Genworth policies and things, so it carries a lot of good a lot of good weight with them. I didn't do a bunch of different quotes because I don't want to overwhelm you guys with numbers, but this same $25,000 guarantee UL is $55 a month.
What's the underwriting with that?
They're going to have to do a paramed blood and urine, okay? And you had a couple of them issued, right? Standard, took some,
One select and one preferred.
okay. With the Genworth life insurance, they've got a ultra preferred plus, I don't know what it's called, preferred, select, and then standard. There are 3 grades above standard that'll bring the price down from what I'm quoting you right now. The cheapest version of this is $45, okay? So I just show them middle of the road like we're taught to do. So 55 bucks a month for 25,000 at 65-year-old female is pretty decent. Any questions about this so far? Pretty straightforward, guys. I mean,
I just had a question. So Genworth has the software where you can run the quote just like that?
yes, all of these are based off of software for the most part. That's what I like about that iGroup tool is you go and put it in there and it's going to basically scan them out there for you.
Okay.
Whether I've run across the best of the best with Lincoln at 100,000 plus, or if I'm going against the Americos and other whole lives, Genworth seems pretty universal as long as they're in decent health. If they're not in decent health, and the Americo's not bad. The big selling point, which you guys really need to focus on, and I was just talking to Booer about this, and when Dave and Booer and I were in the business at the other company, even Randy, we wrote a ton of policies that were this type situation.
Have you tried calling them?
This is it. They get a whole life policy. They've had this thing for 12 years, right? It's a $12,000 policy. They got $4 grand of cash value. They're paying 80 bucks a month, and you can't figure out a way for them to use that cash value. They just don't want it. I don't want to do that. I don't need the cash value, and it just sits there, right?
I want to say when the last time the guy.
Anybody in the last 3 months, what do we do in this situation? If you've been here for more than 3 months, don't answer it. What would you do in this situation? Matt, I couldn't do anything. The Lafayette or the everything else, is $84 a month. I didn't know what to do. They didn't really need this cash value. They didn't want to take it out. So what do we do with it?
Look for a UL that can save them some money and 1035 to the 4,000.
Exactly. Okay? Everyone loves to save money. I don't care who you are. Okay? I see a cord in the ground, I'm going to pick it up. It doesn't matter. The actual cash value goes from one to the 1035 and to the other, just like that bucket presentation you guys have seen a million times, right? So this $4,000 goes in. Now you've got a $25,000 policy for the same price. You just doubled their benefit. But when you're going from a whole life, which is very expensive to have, to a guaranteed UL, as long as you're relatively healthy, they're doing a little extra underwriting than you would with a normal whole life. So the cost of insurance is cheaper than that anyways. Okay?
So Matt, I can 1035 into either one of those products.
Except for Lafayette. America or Genworth, you can 1035 into both because they're universal life.
Okay, right.
You cannot 1035 into a whole life, for anybody that is going to ask. Have you guys done these before? I actually haven't done any of the smaller ones in a while. I mean, obviously we've done a lot of the bigger policies, dumping in 40, 50, 100 grand. These little ones are what really add up. There's not a lot of the population that have $200,000 policy with a 40, 50 grand of cash value, but these are a dime a dozen. There's a lot of people out there. As long as you're healthy, you should be able to get them approved for that. So, you guys all have the Life Crest. Are there any leftover brochures? Yes.
A bunch of them.
There you go, Matt.
And yes, we do offer North American and West Coast Life and probably 12 other different life insurance carriers. I just want to keep this very straightforward and simple for you guys, just so you can hit the ground running and have something as a template. So, do you guys want to go through a brochure? Would this help at all? I looked at these quickly before. It's pretty straightforward for the most part. What's actually really cool with these two, and I believe the Transamerica is the same way, as long as you keep your policy for 20 years, it has a return of premium on it, which is really, really a cool feature. There's nothing extra for it. So those people that are used to terms of return of premium, you get somebody that's 60 years old and they hang on to it for 20 years and don't need it, or if it's a wife that's old, younger than the husband, they could take 100% of that premium back.
But no later than age eight.
Age 65 is
Yeah, if you look at the bottom of page 7, there's a little box at the bottom that kind of explains a little bit about that. The LifeCrest Index guarantees your client can surrender the policy up to 100% of the premiums returned up to target. This benefit is guaranteed as long as the target premium is paid as scheduled. If they've missed 3 or 4 payments and they've got loans against these things, these numbers change, obviously. The term of the premiums, issue age is 18 through 45. You know, that's not really going to be our target marker for the most part. 46 through 60, it's 20 years after issue. If they issue it 61 to 65, at age 80, they can get that back. These are just extra bells and whistles. Does anybody in here sell off of brochures? I don't think we really do all that much. I gave one of these to you. Sometimes people like to see the actual company name. Mr. Jones, let me show you this real quick. You don't have to leave this with them. You get it as long as they have a buyer's guide to be compliant. But sometimes it's nice to see the actual America Life crest and whatever it is. We're also going to be doing that with the annuities as well. Dave and I were talking before. We're going to actually get some annuity brochures to be a little bit more professional in front of the clients to show them what we're going through. Okay?
Do they have to pay for the return of premium?
No. It's built into it.
Just so you know too, most of these companies, if you do have a product you like and you use fairly often, you can order brochures straight from their website when you log in. So if you end up doing a lot of these and you want to have a brochure every time you sell one, they will give them to you.
Well, if you look on the upper right-hand side of page 7, it says client materials. We offer a full range of client-approved materials to assist you. All you do is go on the website.
Yeah.
They're extremely easy to order.
We do have the client-approved version of this. I actually did pick it up right off the bat. I had half of these and I had half the client ones, and they look identical except for a couple different things, and I realized one's a producer guide and one's the other. So there are some of those in the back for the client guides. There's only about 10 of them there.
Hey man.
Yeah.
The LifeCrest Index, that return of premium, I know a lot of the clients will not always do the target premium, just do the monthly minimum. That's only for the return of premium. They have to meet that target premium.
Let's address that. You don't want these people paying minimum premium, guys. You guys, everybody know what minimum premium is? Should we get it? Let me get into the technical side. I'm seeing a couple different eyes here. Let me talk a little bit more about the universal life in general, okay? You've got, when you've got a policy something like this, let's say this is a $100,000 UL. If they're paying $80 a month and they've had this UL for 20 years, this is where we get into minimums. A flexible premium UL, you can pay whatever you want into it, okay? You can pay there's a minimum. It might be $12 a month or $15 a month. That thing might only last for a year and then be gone, okay? So with a flexible premium UL, let's say they're paying $80 a month. $80 a month goes into this bucket. There's little holes in the bottom, right? You guys all, I'm sure I'm getting smiles because everyone's like, great, I've seen this 1,000 times. $80 a month goes in. What comes out is the COI. This is the cost of actually having the policy, okay? This cost of insurance might be $50. When you're talking minimums, the minimum to get this thing going is going to be that $50 a month. That's just the cost of insurance. In order to get the guarantee side, you have to pay the $80 a month, have the cost of insurance comes out, and the remainder builds cash value. Okay? And what that guarantee says that even if this cost of insurance goes through the roof, okay, and there's no cash value left, they'll continue to pay that death benefit forever. If you have somebody pay the minimum, they're only paying $50 a month, this cost of insurance increases every single year. So next year, it's $58 a month. Year after that, it's $63, and it keeps going up. What happens with your cost of insurance gets to $100 a month?
They're upside down.
You're upside down, right? And now your $4,000 cash value keeps going down because the difference, if 80's going in, 100's coming out, that's $20 a month that's going out of your policy. If you run into somebody and say, hey, my cash value's going down, I'm not borrowing against it, or if they're getting statements in the mail, this is probably what's happening. It's an underfunded UL. Flexible premium adjustable life is the same as universal life. Don't let that fool you, okay? So if you have somebody paying the minimum of $50 a month and that cost of insurance goes up, they're going to be having a bump in payment and they're going to lose their coverage. Does everybody follow that?
The reason that it goes up though is because the interest rates usually, I mean, aside from them not making the minimum payment, it could be because of the interest rates, right, fluctuating.
Yes, they assume an interest rate in a non-guaranteed UL, because there are non-guaranteed ones, and that's when this happens to. They assume an interest rate. Back 20, 30 years ago, it might have been 8% or 10%. 20%, Randy says. We assume it's going to make 20% over time, and you only have to pay a difference. Well, if they're not making 20% on your premium, they're not making what they're anticipating, you're going to have to start putting more money into it, okay? Because when you're putting money into it, they're paying you an interest rate on that cash value that builds it as well. That cash value gets cut in half, you're supposed to pay the difference.
You just may want to mention that there are a whole lot of those policies out there, just like that.
Tons. I mean, that's probably 25% of the ones that we replace. Okay? How do you find this out? You look at the policy? Huge, 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 huge. Okay? Oh, I got a $100,000 policy. I only pay $80 a month for. Oh yeah, it's pretty cheap. Well, how long have you had it for? 20 years. Let me just do a quick review. It's kind of like going to the doctor for a checkup. You get your mammograms, your colonoscopies. You don't anticipate anything to be wrong, but you get that done anyways. Okay? Come to find out they have a cancer on the policy. You want to know about it now while you can fix it. Because if not, this thing keeps getting worse and worse over time. That $4,000 is now down to $2,000. Still not going to make a difference. Then you call up the company, they send out a projection, your policy lapses in 18 months. Whoa, I've had this thing for 30 years, what's going on, right? So, this is universal life. All the ones we offer over here, the ones I'm talking about, are guaranteed universal life, so your death benefit and premium cannot change. You want to make sure you explain that, because these are scary, those are not. Again, you have to pay your premiums, you don't want to miss premiums with that. The TransAce, this is another one. I've actually written a couple of these. You're going to need a paramed with these. I think I wrote a quote on this. The TransAce, you're going to need a paramed for this one as well. These go as low as $25,000, but again, it's not going to be cheaper than Genworth. So if I'm putting TransAce against Genworth, I'm going to go with Genworth. I'm going to be honest with you, I've never written a policy with Genworth yet. I'm taking Scott's word for it. I've never had one go through the whole process. Pretty decent overall.
Yeah. Okay. This has got to be healthy. If somebody's got a couple of different items that you may want to look at TransAce. If they're taking a diabetes medication, a high blood pressure.
Pretty similar with a Lafayette. You're not going to throw somebody in a Lafayette that's got diabetes insulin, right? You're going to go with an America or somebody that's going to accept them without giving them a graded benefit. So this is just a brochure on the TransAce. I don't want to bore you guys with brochures because they're all basically the same. But I want you guys to kind of go into it and say, oh, at least I know. Norman opened my eyes to him, and he's been writing a ton of this stuff, right? The last 6 weeks.
I wrote about 15 of these so far.
Yeah. I mean, go back to your old clients if you guys have been here for 6 months, a year, whatever it is. As long as it makes financial sense for them, you can save them a good bit of money. I was bragging about the Genworth the whole time. I printed off 2 things here. Do not lose this. Somebody came to my office and yelled at me for printing in color. So please don't lose this. Put this in your presentation book and make lots of sales off of it. I'm just kidding. He's right though. This is for your presentation book. Please don't just throw this in the trash. This is a guide. I'll wait till everybody to get it. I'll pass this one on to.
Imagine, the only place that we can run the software, or right now, for people who haven't written Genworth is off of the iGroup tools, right? Because
Can you run software without an agent number?
I don't think you can download Genworth without agent number, right?
I think off iGroup you can.
iGroup you definitely can.
You need long-term care, so you can write Genworth, is that right?
Yeah.
Partnership?
Yeah.
Yes, you do.
Yeah, the long.
Yes.
If you don't have the long-term care, then we can't write it. It expired in June.
Yours is still good.
Does everybody in here use a presentation book? Does everyone have a presentation book?
About 20.
I mean, that's like my security blanket in the house. If I don't have that, I'm kind of like paranoid, you know. But this is where I put these type things in. Okay, I pull this out in the house. Let's say you're going against somebody and you're in a pretty savvy.
Color one.
Does everyone have one?
Need one more?
We gave her a monument.
There should be quite a few leftovers.
So you create two many other ones?
The 55-year-olds.
Okay.
Maybe 65 too. All right, guys, real quick. You guys all see this?
Yes.
Is that not our top competition out there? Look at the companies we got here. Lincoln Financial Group, John Hancock, ING, Prudential. I mean, those are all some of the top companies you see out there with the, A+ ratings, really good companies. The first one I'm going to talk about is, this is first off for a male age 55. They have the same exact brochure. It's 65 years old as well, and all the numbers are relatively the same. It is the best in 65 category as well. The full pay annual is that they just pay an annual premium, okay? $250,000 policy, guaranteed to 105 years old. 55 years old, he's got $29.86 a year, okay? Take a look at that target. Since when do you pay a premium and have your target go higher than the actual thing? I mean, in this situation, they all do, which I found out, but when we're running Lincoln and INGs, if you're not doing a dumping, statistically the target's going to be less, you get paid less. What, Randy?
No.
You guys know what I'm talking about?
No.
Especially with
Yeah, no, I
preferred
don't
and-
have a question. I'm scratching.
When you've got a client, let's say they take out a UL, Lincoln policy, they pay $100 a month. When you make commission, you don't get it off of that 100 like you would a whole life. You get paid off of target, okay? In this situation here, they're paying $29.86 a year. Your commission rate is based off of that target. So your 50 or 60 or whatever the percentage is off of $36.95 instead of $29.86. That's like 2 policies in one. That's an extra $700 roughly in premium you get paid commission on, okay? Because we get paid off of target. That's all target means. Does nothing for the client, okay? 10 pay premium is there, and so is the single pay. We look at it down across the board, and it's it's a little bit cheaper than Lincoln, but it is cheaper. So when you're sitting down in front of somebody saying, "Listen, we brokered through all these companies. That's what I told you we would do." They're the best right now, okay? Going down a little bit further, this is really different than what I'm used to running. When you run those Lincoln ULs, what happens to that cash value at 100 years old? For those of you who have run them. You dump in some money, cash value goes up and goes back down. Cash value hits 0, the death benefit's still there all the way, right?
Yeah.
This one here, your cash value continues to grow. Based off this same exact thing here, you look at the other ones here, and at first I thought it was like a typo or something, but you look at Lincoln, Hancock, ING, and Pru, they're all 0 in 30th year. Where Genworth's got 37,000.
How's that possible?
I don't know.
I mean, they're like, you look at the 30th year, they're 37,000 above everybody. I mean,
I have no idea.
It's kind of like the Americas, when you run that life index, it grows, or they project it growing throughout. But still,
So I mean, that's basically what you want to show people. If you're in a situation, you get savvy clients there, they're going to shop different ones saying, listen, these are the top ones, this is why I recommend Genworth. You want Lincoln, we'll go with Lincoln. You want ING? I'll rate you ING. Okay? But when you throw those options out, like you're not afraid to broker through anybody, they're going to go with the cheapest because they've heard of them all, and they're going to want to go with that. I mean, they're all A+ rated anyways. Surprised Bankers isn't on here. This is just a quick key features thing, printed in black and white. This is just no big deal. It's just something to help you guys a little bit. Issue age up to 90 years old. That is a big deal. I just had this conversation with somebody last week. We're looking for somebody that's like 86, 87 years old. Well, I was running Americo and Transamerica rates before because that's what I was familiar with. But it's going to be a lot cheaper to go with the Genworth. I don't know what it actually is yet, but you can just tell relatively, it's probably 15, 20% cheaper. They do not require 2 months premium, Scott. They do not require 2 months premium with Genworth. I called and asked. They do draft for the first month's premium as well. In a situation where nobody has insurance and you're issuing them a temporary insurance agreement, then they will require a couple of months issue to get them back up to where they were. Most of what we do are replacements anyways, so as long as you're not making that coverage effective on day one, which most of them aren't, you can just do it just like we normally do.
Both of mine, it's on the delivery requirements of 2 months premium.
Did you have a temporary insurance agreement?
Nope.
When was it issued?
We had one issued a month ago and one just this week.
That's why. If you did the month ago one right away, because that's the guy on the phone today. He says, as long as it's issued and you don't, if it's issued, you know, and you get it delivered within a week, then you're fine. You draft your first.
One was just, we actually just did it yesterday from issue date of 2 days ago.
What was the effective date?
Issue date,
But
I'll show you on it. It's 2 months. Dave was there with me last night. So it's on
It
there.
is not a prerequisite to submit 2 months premium with it though.
Not to, okay, I'll show you.
Okay, I'm going off of what they said, so I mean, that's TBD, I guess. Scott says one thing, Genworth says another. But, no, but it's true, I mean, I've run across that before, so I guess just, worst case scenario, you may have to pay 2 months.
The bottom paragraph where it shows cash surrender value shown here based on current values, it does show values assume that annual premiums shown are paid at the beginning of each policy year. There are no loans or withdrawals. Based on these assumptions, all policy values may decrease rapidly in later years. I mean, those values that they show for Genworth, that may be based on current values, but obviously, like you said, with a UL, the cost of insurance is going to increase, so those values may not be accurate. I could be wrong, but is that how they're coming up with those numbers?
It's kind of like one of those situations, if they're all running them based off the same thing, as long as it's all relative. You know what I mean? They can't run one way and one the other. I would assume that all of these are based, I mean, the cash value growth and all of these are based on assumed values, like it says in the title. Again, if that happens, you know, worst case scenario, it's the same as the rest of them. But that's just the way they're assuming it. Maybe they're assuming 30% growth each year. Who knows? Key features of this, let me see real quick. 1035 exchange with loans are permitted. If you do a 1035 exchange and you erase a loan, what happens? Somebody's got a $4,000 loan. We did a 1035 exchange, took the loan off.
They paid the loan.
It's a taxable event.
You have the policy.
Yes, Marty.
It's a taxable event.
It's a taxable event, right?
Oh,
Okay? For people who don't want the taxable event or whatever else, or let's say they don't care about the loan all that much, you want to make it as extremely competitive as possible, they can carry that loan over. Instead of bringing their premium down a little bit, bring your premium down a ton and keep the loan on there. I don't know why you would want to do that, but you can.
Can you explain that taxable event, please? A little bit more.
Cash value is $4,000. I'm going to make a blue bucket over here.
Blue bucket.
Okay? We took this $4,000 cash value, but it's not 4 anymore. It's only worth $2,800. This $2,800 that's left, okay, because their cash value is $4,000, $1,200 loan. Their cash surrender value is $2,800 going into the new policy. This $1,200 difference may be taxable.
So what do you get, like a 1098B or something like that?
It's just a regular 1099 form that they would
Right,
get.
1099.
And they actually look at, the bigger ones are going to have more taxable events with this. The smaller ones, not so much. They're going to take a look at it's the adjusted cost basis. How much premium you paid in over all these years minus the cash value that's left, and they're going to find the interest you've actually made on that. They're trying to figure out the interest rate, the interest you've made, kind of like an annuity.
Right.
When you do take that out, how much interest you made to make taxes. So this $1,200 is the taxable amount, not the full $4,000.
$1,200 is the amount of the actual loan.
Right.
Have they already been, they're not going to be taxed on the loan when they withdraw it? When they take the loan
This
out?
is the part that can be taxable.
I mean, have they been taxed on it already when they took it out as a loan?
No.
They've been paying interest on it.
Right, because they're just borrowing again. When you borrow against your cash value, it's not a taxable event.
Is that,
When you cash it in, it is.
isn't that when you get your cash surrender form, you can say, I want to be taxed?
You can elect to have taxes taken out, or you can do it at the end of the year.
And that would be at the end of the year. Because you can just do it right on the spot when you get your cash value back, right?
Yeah, I mean,
Okay.
it's up to the client.
Imagine there's a spot
What
on
if
the
it's,
other.
what if it's a loan based on the fact that they missed a few payments, it lapsed, and then they're still taxed on that, even though they didn't actually get a loan from it, you know, how they still consider it?
You miss
a loan?
payments, that's how a lot of these loans happen.
Right,
These people are like, I never borrowed against that.
right.
Norma and Hilton Head, remember that?
Yeah.
Ladies blue in the face, I did not borrow that cash, it was like $3,400. She missed a bunch of payments in a row, and that's what ended up happening.
And she's still taxed on that.
You're still taxed on that, yep. Because again, all that's saying is that you didn't pay your premium, your cash value paid your premium for it. If you died during that time, we would have still paid out and you didn't pay any premiums for it.
Matt, how could you pivot off that as you could, that could be a selling point to change it over? You know, you're gonna get taxed on the loan you bring out. You can,
No, you don't want it.
No, that's not a selling point.
It's not a selling point, that's.
just to let them know that they're gonna be taxed on it anyways.
It's really not that big a deal. It's kind of ordinary income tax. So in this situation, this full amount was taxable. That's like saying, here, I'm going to say, I paid you an extra $1,200, count that in your income tax. Might cost you $50 or something, you know. Or you can take that out. If you know, this $2,800 that comes out, like you said, I elect to have it withheld. The $2,800 now comes into $2,750 or $2,710. They give you the remainder.
And it's still not gonna be that full amount either, because some of that money is your own premiums.
Exactly.
You're only taxed on the interest.
Exactly.
Gotcha.
Those things get very specific. I don't want to get that involved with this kind of stuff today. So 0 to 90, you can do. There are competitive hotspots. Just so you guys run across this. If it's 75 years old or below, that's what they're. You know, we talk about bands with different companies, their target market. If it's 75 years old or below, non-tobacco is what their big focus is too. That's where you can get really competitive with them. Okay. All funding scenarios mean you can do 1035s. It's all pretty straightforward for the most of them. They all have accelerated death benefit riders. They're all pretty standard. I just wanted you guys to know the difference because I didn't know until I actually sat down for an hour or two and looked at this stuff. You know, when do I write this and when do I write that? You're in the middle of the country and this lady does not want to have a pyramid done. I am not doing it. I just want a little burial policy of 25 grand. Write her America. It'll be cheaper than the whole life, right? You got a guy down in Hilton said, I want the best price UL you got. I'm in perfect health. I'm in the gym all the time. I play golf all the time. Who are you going to write? Right? So, I mean, it's pretty straightforward for the most part. So, you guys have any questions at all? I started, it's a tough mix training brand new people and then the more in-depth side with the guys that have been here for a little while. So, and the next meeting, I'll show you how to actually run software in specific scenarios we've done with clients that we've had, with dumping money in and all those kind of things. Those are pretty fun to look at, the before and afters. Everyone's pretty much seen the before and afters. For the most, you know. Another option too with guaranteed ULs, or money guards, or anything else. Keep in mind what we talked about in the Friday meeting before. Let's say they just had money sitting in a checking account. This is going to be my money for burial, this 8 grand or 10 grand. Those are the kind of things you can dump into this as well. Single pay. Dump in $8,000, get $25,000, and let that thing run out guaranteed if that'll do it for you. You know, 60 years old or whatever it is. So, any questions? I try to keep it very light here. I don't want to get too involved with this stuff because there's a lot of this stuff. I mean, there's pros and cons. You got the pros of being the brokerage side where you can offer all these companies, but now you got to remember them all. Medicare Advantage certification, fun stuff. Now we're going to go through all those different ones with them too.
One thing that Sean and I ran into the other day, which I guess some of the newer people may not have known, is MetLife does have stocks associated with some of their older policies. So if you're a newer person and you run into an old MetLife policy, the person may not realize it. We ran into a fellow the other day, he had about $12,000 to his name and we found $2,100 for him that he didn't even know he had.
Does everybody know that?
Say that again?
Talking about Mellon Investor?
Well, there's two companies. There's MetLife and there's Prudential. Okay, they went through demutualization back in, what was it, 80s, Dave, 90s?
91.
they went from being a privately traded company to a publicly traded company, and they issued shares of stock for clients based off of their life insurance. I don't know if it's premium or death benefit, but what you come to find out is that these people have whole life policies that have 4 or 5 grand of cash value, and they get it mixed up. At the end of the year, they get a thing in the mail for taxes saying, oh, you've got 3 or 4 grand here. They think it's cash value, and it's stock that was assigned to them 20 years ago. That money's just sitting there that can use to pay off a credit card or whatever else they need it for. And MetLife actually and Prudential go through Mellon Investors. So if you ask them, have you ever heard of Mellon Investors before? Yeah, they send me a statement every year. Probably have shares of stock. My grandmother had that as well. So you can always call up MetLife. They'll give you the number for Mellon Investors, and they can look it up by her social or his social. But that's a good point. There's a lot of things you find for people. Another lady's telling me that she's blue in the face. I do not have any stock with this company. I know for a fact. And she's a younger lady too, a little feisty one. And sure enough, I found her $3,600 that was just sitting there. So, but I mean, the moral of the story is call up these companies. They don't know what's going on. Underfunded ULs, whole lives that they that are really terms. So, give them all phone calls. Let me ask, I want to make kind of like an open forum here. What else have you guys run across that might be good? Because all these things that I'm talking about today were kind of a medley of what we're writing the most of. You write West Coast Life. Why do you write West Coast Life? Competitive? The other guy in the orange shirt.
North American. He writes North American.
You write, oh, that's right, North American. Yeah. Sorry.
I was like, what's it's just a good, very competitive, you know, and their software is easy as can be, but you know, you can guarantee the death benefit up to age 100, and it's a good guarantee product, you know. I just really enjoy it. If anybody's got their North American software, mess around with it. You'll see the rates are really competitive. You know, they beat out. They're very competitive to the Life Crest Index. So.
Okay. How about West Coast Life? Anybody run those?
I ran it off iGroup tools that for a client that Sean and I wrote, and it was just it was most competitive for that particular person. So the one thing that's a little different with that is when you do the paramed, instead of just calling in Portamedic or whoever, hopefully we can find someone else. You have to send in a fax to them to authorize the exam.
What we use right now, guys, is this. I called them twice right before a meeting, and if you're watching this, then you need to fix this on camera. Didn't answer, but that's what we go through. Whenever you write a big life case, if it's $25,000 or above and it's not an America type situation, they're going to need a nurse to go and do a blood and urine sample. Okay? You know, at our age down here, you know, 20 to 40 years old, 50 years old, we don't get a lot of needles too much. These people are used to getting their blood drawn. At 65 years old, they're going in once a year. They're getting their blood drawn like crazy. So they give you some kind of excuse like, oh, I don't want to deal with needles. I gotta tell Norman, either there's something else going on that they're not telling you or something. But most people, I'd say it's pretty rare, but most people are used to getting blood drawn on a regular basis. Okay? They're gonna have you pee in a cup, do a blood sample. I'll arrange that for you. You know, I'll give you a call back in about 6 weeks when we get the approval. Specific quoting software we'll do in a couple of weeks. Overall concepts are definitely there. You gotta write a bunch more of these though. This is like our target market. It should be. There's a lot of seniors that have little burial policies. We can't beat with the whole life. We might as well go with the guaranteed UL.
The commissions on differences and like, you know, a specific case that I had, a guy had $20,000 worth of term. I had written him $10,000 worth of simple issue secure guard a year ago. Then I go back and I find out he's got $20,000 more of term. I said, well, let's combine all of this, and I wrote him a Lafayette. And so now all of that insurance is one. I'm not going to get a charge back for the secure guard because it was over a year.
Yeah.
But then if I took that guy and I tried to put him, because he's fairly healthy, he's about 70 or 72 years old, and I wrote him an Americo UL, right? Would the commission, would it be worth it to me? Would I get chargebacks to the from the Lafayette?
Yeah.
You know, I mean.
Any
I would-
unused premium, if you wrote it in July, they're gonna look at how many premiums he's paid into that had coverage. So if it was July, August, now we're in September, they're gonna charge you back, because we could advance 9 months with them, you're gonna get charged back 7 months. They've paid you 9, client only kept it for 2, you're gonna get charged back for 7.
But then would it be worth it commission-wise? I mean, if it's worth it for the client.
I don't wanna
would
talk
do it, you know?
commission-wise, because I mean, you're supposed to do what's right for the client.
Well, I'm saying that, I would do
So, I
what's
mean,
right for
that's
the
your own
client.
personal preference.
I'm just wondering what will happen to me in the process of being right for the client, you know?
You're gonna get charged back 7 months, and then
No,
you're
but I'm talking about a UL commission as opposed to
gonna get charged back 7 months from Lafayette, you're gonna get paid 9 months with whatever company you go with.
what specifically is a UL, is it a greater commission than a simple issue? It's usually less.
It's on the sheet that they.
It's pretty comparable, isn't it? Maybe a little bit less, I would imagine.
Look at the commission for now.
Yeah, we got a
The
commission.
America UL is
Correct.
higher than the other ULs.
The
America
commission-
US higher, okay.
Yeah.
But in that situation, Marty, instead of getting at that, why don't you just, use the same death benefit and get them more, or the same premium and get them more coverage? That way it's not gonna be a wash. You know what I mean? Your target will be higher on that.
Well, I'm worried
Instead
about
of saving
how
him
much
money-
I'm worried about a couple of things on this.
Your
one. You know,
commission.
One of the things that he's paying $185 a month, and whether for $30,000 worth of insurance, whether or not he's gonna keep it,
How in the world is he paying $185 for
Let's listen to this side, guys. This is very specific. This is important. I wanna make sure you guys understand that. What is an incontestability period?
2 years?
What is it? What does it mean?
If they lied on, or if they made a mistake or whatever, and they said that they have whooping cough, or they don't, and they do, and after 2 years, they die from that, it can't be contested, they have to pay the policy.
Keep that in mind. We're doing a lot of replacements here. Make sure that you're not doing anything, you want to do it all by the book for the most part. If they've got something wrong with them, don't try to squeak anything by and try to put it under the radar. They die in 18 months, you got to go back and say they lied in the application. We're not paying out 20 grand. That's going to be a nightmare, okay? When you're doing a lot of replacements in that situation, Marty, and anything else, whether it's existing clients and you're always doing these replacements, there's a 2-year contestability clause that they can go back and see if they lied in the application and deny claim. And they try their darndest not to pay out if that's the case.
I have a question for you.
I had a scenario like that, where actually I did a secure guard. Actually, it was right here in Somerville, and it turned out that she died 6 months later. And secure guard, they did an investigation. It turned out that she had COPD, but her doctor didn't tell her that she had COPD, and she died of COPD, but then it caused a complication of a heart failure. So instead of putting like heart failure on the death certificate, he put COPD. So, and she answered that no, but also the verification call too. Well, the in-home call, so,
Yeah.
it wasn't anything negligent that I did, it's just that,
Sure.
you had to look back. Now the family's trying to sue the doctor said he told her, it's back and forth with that, but.
I mean, that, again, in that situation, that's fine. But when you're talking anything else, I mean, there's nothing you can do about it. It's a very, it's a tough situation. But I just want to make sure you guys, if there's something there, do not replace it. You don't want to be that guy, okay?
What if you walk into a house, let's just throw it out in general to everybody.
There's a
You
cigarette
walk
on the
into a
table.
house and you find out that on the policy that they have now, they're somebody lied. What do you do in that case?
It depends. If they lie and it's a gender issue or it's a tobacco issue, that needs to be brought up because those things are a big deal. If you guys do your phone interviews with SecureGuard or any other company, they'll say they can deny claim at any time, even past the 2 years. Okay? So that's a big deal. If you're somebody marked off non-tobacco and obviously they're a chain smoker and they've been smoking for a number of years, say, just letting you know, as long as your doctor knows about it, this isn't going to get paid out if, because there's no contestability period. That's forever with the tobacco question. That's why they say in that interview there. So.
And you will come across that. You'll come across the client that's got a rate and you're like, how are you paying so little? And you look at the original application, they checked off non-smoker.
Yeah, I had a guy that smoked cigars once in a while. So he said, oh, I don't smoke. Because I smoke them once in a while. And if you look on the Transamerica, on the Trans Ace 2000, they ask you that, do you smoke 3 different times on 3 different sheets of the application in various ways to try to, catch that out there. So you gotta be really conscious about that.
The flip side of that, we were talking before, obviously that's, I think I'm pretty sure gender's the other one, but tobacco's a big question. If it's a health-related issue and it's been more than 2 years, if they've had that policy more than 2 years and it's a health deal, it doesn't matter.
What if it's a weight issue that because I ran into a client, the guy weight was lied on the thing, he did an extra 40-something pounds to bring it down. I go in there and, it's definitely not that weight on that old application.
Who did he get fired from? What was the pound difference at the other place?
Who?
Jim.
Like 60, 70 pounds.
A guy did that and got fired over that, the agent that did that. So if you run across something like that, I mean, obviously that's a big deal. I don't know if that's one of those situations where they're going to contest that at some point.
Like, do you go ahead and, call the Department of Insurance on that?
Well, if you're doing a UL, they're gonna do a paramedic anyway, and regardless of what you put on the application, the paramedic's gonna come back at 260 if you wrote down 210.
He's saying, is that thing going to pay out, I think?
Yeah.
Is that thing going to pay
even
out?
though we didn't write it, is that even gonna pay out to the client, and should we say something or move something on to
It's
the
over 2 years,
Department
it's
of
over 2 years,
Insurance?
it'll be fine.
Guys' weight changes readily in any human being, so I mean, they're not gonna not pay on a case because of
But
the
it
weight
was on it.
situation, but
Yeah,
I also want to
driver's
encourage you
license.
guys, I'm sitting here listening to all of this stuff, and there's a lot of what ifs. I want to remind you guys that the term insurance producer is synonymous with field underwriter, which means it's you guys' responsibility to make sure that you are answering those questions as honestly as you possibly can, instructing those clients in the best ways that you know how. We're not out to fool the insurance company, we're out to put the best protection for that family in place by the book, okay? So if there's a question about it, do what feels right, okay? We're not trying to fool anybody here. You guys can run into licensing issues, contracting issues, you can cause your clients not to have payout on cases. So I want you guys to pay very close attention to, if it doesn't seem right, don't do it, okay? I really want to encourage you guys to remember to always do that. Sorry, that's my little compliance officer piece.
The last place you want to be is standing in front of the insurance commission up in Columbia, trying to explain why you put down something on an application.
I'm going to let you guys know about this, and this is something I've been dealing with for the last 2 months. I have a client in Merle's Inlet that I wrote, and she had an AARP policy, okay? Some of you guys know this story, but she had a term policy with New York Life AARP, right? We all know how those work. Go up every 5 years. Then what happens at age 80? It's done, right? The lady's 74 years old. I meet with her. She's in great health, had diabetes and blood pressure, but no insulin. Wrote her a Secure Guard. 12 months later, dies of a brain aneurysm. Her daughters are fuming at me because AARP would have paid out, okay? But I know I did it by the book. I asked her all the health questions. There was nothing wrong. I sat down with them. I even called AARP to find out how much it would be to convert it to a whole life with them. In that situation, for her, it was cheaper to go with the Secure Guard anyways, okay? But that's a really big deal because this lady runs a big hospital deal up there, and you want to make sure you're always doing it. You never know what's going to happen. You can lose your job over something like that if it goes the wrong way. But once you sit down and explain it to them, listen, she was 74, she's getting a price jump in 6 months, and then 5 years after that, her coverage ends. I'm doing the same exact thing as if I would with my mom. We kept her death benefit the same, and we tried to get her a policy that was permanent. You know, but same exact thing. They're fighting the doctor right now because she had kidney abnormalities or something. The doctor had put in there, and then like she didn't have any of this. So,
guys, that's one more reason to do a good job on your suitabilities too. I know for you new guys
absolutely.
that Boer did a little suitability and fact finder training with you guys last week, but that sheet is there more than just to give you another paragraph to write. That sheet is there so that 3 years from now, when that person passes away and the family is going through trying to figure out why a company didn't pay out, that you can prove with your unfortunately dead client's signature why you did exactly what you did. I mean, that's why that form is there. And for somebody that looks at a lot of the applications that come through, suitabilities have gotten pretty darn slack. So let's try to get back to writing why we're doing what we're doing, not just client needs life insurance. Okay?
I needed the commission.
I needed actually $200.
Marty. I ran the numbers and I gave you a 7-month charge back but a 9-month advance and I made $140. I got a phone bill coming up. Alright, we kind of jumped around a little bit, guys, and I knew it was going to be this kind of training just because we're all over different experience levels and there's a ton of companies out there. I just want you guys to see basic bullet points in your mind to run across it. If you guys have the opportunity, go to that iGroup website and download the Generalist software if you can, if you have your agent number or when you get it. That way you can run it in the house or whenever else. Because it is an internet-based, the iGroup is internet-based. So, cool. Thanks, guys. Thanks, Matt.
Thanks, Matty.
And this goes in your presentation books.
Hey, Matt.